Hello, neighbors, and welcome back to the neighborhood. I am Squealer D, and I am back again. And this time, neighbors, I am back with a dry throat. Why? Excuse me. My hair is, I don't know why, but it doesn't want to do anything today. It's just wild. That's okay, guys. So we are back. And we were going to read this book today, guys. Stock Investing for Beginners. It is only 99 cents on Kindle, my friends. You can buy it now with one click. It is by John Roberts. And this is what I am reading, friends. It is very, very, very little. I'll show it to you. This is the book. See how little it is? It's very skinny. And I was going to read this, but unfortunately, at the beginning of the book, the very first page right there, it says, no part of this publication may be reproduced, stored in a retrieval system, or transmitted in or by any means electronic, mechanical, photocopying, recording, scanning, or otherwise, except as permitted under Section 107 or 108 of the 76 Copyright Act, without prior permission, written permission from the author. So, I emailed him, guys, and we're going to see if he allows us to read this little book on our stream. And if not, hey, there's plenty of other information on the internet. Try to wet my whistle here, guys. Ooh. I got some lemon tea with honey, and hopefully that clears me up. I'm not sick or anything. It's just allergies. I don't know how many of you guys get allergies. They hit me hard at this time of the year. Okay. So we're going to talk about scalping today, guys. And we've heard it several times over our readings. Scalping is a strategy used by intraday traders. And that is where you trade for a small price, just a small profit. And you go in the price changes. We're going to read about that in a minute. First, let us look at the finance news, guys, because this is important. General Mills drops a limited edition packaging. Good for them. Another bank, guys. Another bank. This is what? Fifth, sixth bank. Stock slip as regional banks tank. PacWest tumbles. Oh. Stock slump Thursday morning as markets digested the latest interest rate hike from the Federal Reserve. So they raised us again, guys. The 10th bump in a row. And more pressure on the regional banking sector ahead of the highly anticipated earnings release from Apple. When does Apple release theirs? Let's check out Apple's, guys, see when they release. Financials. When was this released? 9/31. So these are old. Apple's up. Apple likes to stay up, don't it? Okay. So they don't have their earnings report out yet. That's fine. We were just going to see what it said. So the SP 500 fell. Dow Jones lost 1.15. Okay. So shares of regional bank PacWest tumbled nearly 60% Thursday morning. Oh, dang. Oh. Oh. Oh, what's wrong? PacWest, you guys see this? $51. At the beginning of the year, $51. $51. $29. This morning, $27. No, this morning they were at $9. Now they're at $2. What's happening? $2? Oy vey, guys. These banks ain't looking too good, huh? PacWest. Who's going to buy them? JP Morgan? Who else is down? So PacWest is down. Who else? Western Alliance also fell nearly 60 cents. Dang. It's trying to recover. We can zoom in. Oop. It's sitting down here in the toilet, huh? It used to be up here. What other banks fell today? That's crazy. 2 banks. This is 6, guys. 6 banks so far. Western Alliance is exploring a potential sell. Yeah, probably to JP Morgan, right? These guys are down 13, 14%. Man. Little banks are in trouble, guys. Little banks, you know what they say. Once the little banks start to go, it's not looking good for the poor people. KBW Regional Bank fell as much, hitting its lowest ever since 2020. Their highest since 2007 are interest rates, guys. Dang, another. Should regional bank stress stabilize, labor markets stay tight, and inflation stay elevated, a rate hike in June could become appropriate. Shares of First Horizon also slumped 38% at open, its largest drop since September of 08. Toronto Dominion Bank and First Horizon called off their potential merger due to regulatory hurdles. These guys couldn't merger, but they had no problem merging JP Morgan, did they? Man, Paramount Global, 25% down. Peloton, lower. Shopify, 25% up, guys. So Apple, Shopify, Block, Coinbase, Drafts, SQ, and Shopify and Apple are all things we watch, guys. Let us. You gotta have your handy dandy notebook. I need a pen. Looks like somebody stole my pen. That's okay. We got more. Always got to have extra pens around. Okay. I'm just going to write a couple of these down so we can keep a look at them. Apple, Shopify, Block, Coin, DraftKings, and Lyft. Okay. So, oil futures were near flatline on Thursday after falling 10% over the last 5 days. West Texas Intermediate and Brent rose slightly in early trading. Brent crude prices are set just under $73 a barrel. On the economic front, weekly initial jobless claims exceeded expectations. The report said 242,000 jobless claims were filed, an increase of 12,000 from the week prior. Economists surveyed by Bloomberg had been expecting 240,000 claims. The April jobs report is expected to provide a further look at the labor market on Friday. Stock tanks as company cut Estee Lauder. Well, okay, guys. Let's see about these banks. Another bank, my gosh. First Horizon. Canada's Toronto Dominion Bank Group on Thursday called off its $13.4 billion takeover of First Horizon Corp., triggering a near 40% fall in the U.S. regional bank shares. First Horizon and TD said in a statement they had mutually decided to end the deal because there was no clarity on when they would get regulatory approvals. TD will pay $200 million to First Horizon in addition to a $25 million fee reimbursement. TD's biggest deal to date, which it launched more than a year ago, had faced months of regulatory uncertainty, and Canada's number 2 lender came under pressure from some investors to scrap the purchase after the U.S. regional bank crisis. A spokesperson for First Horizon said the termination was solely related to TD, which was unable to get approvals and had nothing to do with ongoing banking turmoil. I don't know, guys. It seems like it has to do with the turmoil. They could not provide an updated timeline for an extension, and they could not produce assurance of regulatory approval in 2023 or 2024. It's weird that they wouldn't get regulatory approval when banks are closing and they can just give banks to Chase. Like, that seems really crazy to me. Like, TD Ameritrade can't get approval, but JP Morgan could. We are surprised that the parties could not come to an agreement upon lower price and believe there could be broader repercussions from walking away, Barclays analyst John Aiken said. So I'm surprised too, because if banks are failing, guys, and they say that they couldn't get the regulatory approval, then perhaps they couldn't get approval because they didn't want this bank purchased. Perhaps they want the bank to be sold out, not to a Canadian bank. They said TD is Canadian, right? That's what they said up here. Canada's Toronto Dominion Bank Group. So this is a Canadian bank, right? And they couldn't get approval. So maybe the big guys knew these banks were going to crash, and they want this bank because they said the termination was solely related to TD, which could not get approvals, right? So what if the big guys made sure they didn't get their approvals so that First Horizon will go under and banks in America will not be able to buy it? They don't have to pay $200 million to buy it and $25 million reimbursement. They're just going to get it like they at wholesale. When the bank closes, they'll get it at wholesale like they got the other banks, right? That's what it seems like to me. So they agreed to buy it, and they backed out February of last year. Okie dokie, banks. Banks are going over. We need like a bank bingo, guys. How many other banks can go under? So the feds raised our rates again by 0.25 cents. We knew they were gonna. So what did they say about it? He didn't say anything about it. Inflation is going to come down not so quickly, Powell said in a press conference on Wednesday. It will take some time. And in that world, if that forecast is broadly right, it would not be appropriate to cut rates. Here's how Wall Street reacted to the latest decision and comments from Powell. Wells Fargo said, in our view, the committee is signaling a hawkish pause in the tightening cycle. That is, the FOMC could clearly hike rates again, especially in light of the sentence in the statement reiterating that committee members remain highly attentive to inflation risks. However, the bar to hike again on June 14th appears higher than it has been in past meetings. For now, inflation, this is from Bank of America, still dominates, and data in hand outweighs uncertainty from bank stress in terms of decisions to raise rates in May. So, let's look for bank tickers. We got First Republic Bank, and they crashed, right? First Republic Bank is one of the tickers that they stopped. Plummeting bank stocks test predictions that worst of the crisis is over. Federal Reserve Chair Jerome Powell said Wednesday that the seizure of First Republic was an important step towards drawing a line under turmoil in the banking system. Within 2 hours, the stock of another troubled regional lender was down more than 50%. The trigger was a series of media reports that Beverly Hills, California-based PacWest was weighing a range of strategic options, including a sell or capital raise. Its stock continued to fall during Thursday morning trading, down by more than 52% after being halted temporarily. Are they halted still, guys? Boy, oh boy. It's down to $3, guys. It's not looking good for PacWest Bancorp. So, while top figures on Wall Street and Washington display optimism that the worst is over, investors continue to punish other regional lenders that share any characteristics of the three mid-sized banks already seized by regulators. On Monday, JP Morgan said, this part of the crisis is over. No, I don't know. The two names most in focus this week, PacWest and Western Alliance, we'll watch these two this week, were among the financial institutions that came under intense scrutiny following the March 10th and March 12th of Silicon Valley and Signature Bank. Both lenders, like First Republic, lost a sizable amount of deposits during the first quarter as customers sought the perceived safety of larger banks or higher yields being offered by money market funds. So they're blaming customers, guys. We sought perceived safety, so we took sizable deposits out, and that made these banks crash. Not the fact that the banks looked unsafe, so people pulled their deposits out, right, guys? People perceived safety dangers, so they pulled them out. Blame people all the time. They blame people every single time. It's not the bank's fault. It's people's fault because they decided to pull their money out, right? So, short sellers have increased their bets against regional bank stock by more than $440 million over the last 30 days. Short interest in PacWest rose more than 18%. So this is what we're learning, guys. We are not here to learn that the banks rip us off. I mean, that is what we will learn as we learn and read. We will learn. Like, this guy's saying it's over, but here's two more banks that are perceivably going to fail. And they blame it on us because they lost a sizable amount of deposits because we perceived safety dangers. Danger, Will Robinson, danger. So, it's not over yet. And this is what we're learning, guys. This right here. Short sellers have increased their bets against regional banks by more than $440 million over the last 30 days. This is what we're learning. Because of this, guys, let's open up another one so I can have double and show you. Let us look at PacWest, right? Okay. Now let me show you guys something. PacWest, this is what we're learning for, guys. So PacWest was doing fine. It was at 26, blah, 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 right? It was below the moving average. That was the moving average. We can... So... It frequently crosses the moving average. That's not what killed it, guys. You see how it goes up and down? So, what killed it is short sellers. Short sellers saw the other bank go under. So remember what we learned about options. We haven't learned to do them yet, but we learned that they're insurance against a falling stock. So let's say that you had PACW in your portfolio and you saw the other banks going down, and PACW is similar in all of its statistics to the other banks, correct? Well, you see it going down and you sell your shares, or you don't sell your shares, but you buy options for insurance on your shares. So if it does drop, you can make money off of the drop, guys. That's what they're doing. So people that are already invested in the stock market, they're not putting their money into these new vehicles like us, guys. They already have their money in the stock market. So when things start to fail, they can pull their money from here and put it in other places. Like we read, what was up? And one of them it said that it was up by 25%. Apple, Shopify, Square, Coin. It said it was up by 25%, guys. So they put their money other places. You don't just lose money. These rich people, stock people, normal people that don't know what we know and what they know are on here losing. But all of these people right here, they're moving their money. They're buying puts. They're doing things to save their money. They're not losing $400 million. The bank people, PACW, they're losing money. They're giving their money back. When you sell a share, you're giving it to somebody else. They're not losing their money, guys. When you hear about these type of bank failures, and they're not losing their money. So, regional banking isn't getting easier. So what happens when regional banks fail, guys? I'm going to tell you what happens. The same thing that happens when regional grocery stores fail. It's hard to think about money in the same way we think about other things, because money is so liquid. We have money, we give money, we pay money, it moves around. But think of it in terms of your grocery store. If you go to a grocery store, you have a lot of options. Usually if you live in a big city, you have Albertsons, you have Kroger, you have Fred Meyer's, you have Walmart, you have Target, you have Shopko, you have Safeway, you have what are Aldi's? You have a bunch of them we don't have here, guys. Lots of stores, okay? You have a Walgreens, Rite Aid. There's lots of options. Now, what happens if Albertsons and Kroger, or Albertsons and Safeway, join up? What happens if they buy each other? So now it's one company, guys. Well, a lot of those stores, the Albertsons and Safeway that used to be right next door to each other, they're going to close one down. They don't need an Albertsons right across the street from each other if they're the same company, right? So there goes your options. Now, you only have one company that owns all of these stores. So they're buying all of the food and they're getting deals on their food, right? Because there's only one of them, guys. They're not competing. So they're getting cheap food. And now they're only buying the cheapest of food. So now the store stock is limited, guys, because you have one person doing all the buying. You used to go in and you could buy 15 different kinds of pasta. But now you can go in and buy 5 different types of pasta, because we're not looking at 2 different sellers who are competing. We're looking at one seller who has no competition. If one entity. This is why we have laws, so that one business cannot own everything. If one business owns everything, it's called a monopoly, guys. We've all played the game. If you own everything on the monopoly board, everybody else loses. If somebody owns all of the stores, all of the banks, we are going to lose and they are going to win. That's what a monopoly is. That's what capitalism does to us. They push out the little guys just like Walmart did in towns all across America. They push out the little guy. These big banks, in 2007, when we gave them $700 million to get them out of debt, we effectively made them so big that we helped them get rid of the little guys. And now, all these years later, all of their cards are falling into place with a second recession, and they are becoming the big guys they've always been set up to become. It may have taken longer than some of us would have thought. People said this a long time ago, just like with the grocery stores. And now in my neighborhood, you see people standing outside the grocery stores talking about stop the merger. You guys, if we don't stop these mergers, what do we do for neighborhood banks? We will have no neighborhood banks. You will go to high fee areas like a money tree, and you will get your money from a money tree, and it will cost you 4 times as much. Your loan fees will be 4 times as much because there will be no competition. For loans, there will be no competition. I don't understand where people are so confused about monopoly. If you let them buy everything, we will only be able to buy from them. That means they set the price. If JP Morgan owns all of our loans, that means they set the loan price, guys. That's it. And once it's done, it can't be undone. Bank changes in the middle of the night. They like to make bank changes in the middle of the night. That's why I type that in. Who knows what banks... They probably made this... Man... It's not looking good for the banks, guys. So what we're going to read today is Scalping. We're going to get through this. It's just quick, and then we are going to call it a day. Not a very long one today, guys. Like I said, I was really thinking about reading that book and copyright, and, it's okay. Maybe he will email us. Old John Roberts, that's the publisher, and maybe he will email us and be like, sure, Squealer D, you could read my book, and then we'll read it. And if not, like I said, we'll find the information elsewhere. So James Chen wrote this, and he is an expert trader, investment advisor, and global market strategist. Okay, what is scalping? Scalping is a trading strategy geared towards profiting from minor price changes in a stock's price. Traders who implement this strategy place anywhere from 10 to a few hundred trades in a single day, with the belief that small moves in stock price are easier to catch than large ones. Traders who implement this strategy are known as scalpers. Many small profits can easily compound into large gains if a strict exit strategy is used to prevent large losses, like a stop loss, guys, or a stop limit. Scalping is a trading strategy in which traders profit off small price changes for a stock. Scalping relies on technical analysis, such as candlestick charts and MACD for execution. The small profits earned with this technique can multiply, provided the trader consistently uses an exit strategy so as to mitigate losses and reap gains. The basics of scalping. Scalping utilizes larger position sizes for smaller price gains in the smallest period of time. It is performed intraday. The main goal is to buy or sell a number of shares at the bid or ask price and then quickly sell them a few cents higher or lower for a profit. The holding times can vary from seconds to minutes and in some cases up to several hours. The position is closed before the end of the total market trading session, which can extend to 8 p.m. Scalping characteristics. Scalping is a fast-paced activity for nimble traders. It requires precision timing and execution. Scalpers use day trading buying power of 4-to-1 margin to maximize profits with the most shares in the shortest amount of holding time. This requires focusing on the smaller time frame interval charts, such as 1 minute and 5-minute candlestick charts. Momentum indicators such as stochastic moving average convergence, which is the MACD, and the relative strength index, RSI. Price chart indicators such as moving averages, Bollinger Bands, and pivot points are used as reference points for support and resistance. Scalping requires account equity to be greater than the minimum $25,000 to avoid the pattern day trader rule violation. So remember, if you scalp, you make a lot of intraday, you have to have the $25,000 in there. Margin is required to execute short sell trades. Scalpers buy low and sell high, buy high and sell higher, or short high and cover low, or short low and cover lower. They tend to utilize level 2 in time of sell windows to route orders to the most liquid market makers, and ECNs for quick executions. The point-and-click style execution through the level 2 window or pre-programmed hotkeys are the quickest methods for the speediest order fills. Scalping is purely based on technical analysis and short-term price fluctuations. Due to the extensive use of leverage, scalping is considered a high-risk style of trading. Some of the common mistakes that scalpers make are poor execution, poor strategy, not taking stop losses, leveraging, late entries, late exits, and over trading. So bad risk management. Scalping generates heavy commissions due to high number of transactions. A per share commission pricing structure is beneficial to scalpers, especially for those who tend to scale smaller pieces in and out of positions. Scalpers need to be disciplined and need to stick to their trading regimen very closely. Any decision that needs to be made should be done so with certainty. But scalpers should also be very flexible because market conditions are very fluid, and if a trade isn't going as expected, they'll need to fix the situation as quickly as possible without incurring too much of a loss. Suppose a trader employs scalping to profit off price movements for a stock, ABC, trading for $10. The trader will buy and sell a massive tranche of ABC shares, say 50,000 of them, and sell them during opportune price movements of small amounts. For example, they might choose to buy and sell in price increments of 5 cents, making small profits that add up at the end of the day because they are making the purchase and sell in bulk. Where to invest $1,000 right now, according to the experts? That's just advice to use their masterworks. But yeah, so scalping. Fast. Plus, you have to have the $25,000 in there. So that is something that we can practice for once we have grown our account, because our account will grow, guys. It's just going to grow slowly. We're going to start with like the 1,000 or 2,000, and we're going to grow it slowly. So that was scalping. We've looked at the news. We've looked at these banks. America had a big change. Western Alliance, PacWest, First Republic. So it makes sense that Comerica and Western Alliance are next. Right? This chart here, First Republic already failed. PacWest is Western Alliance. They're already failing. So Comerica is next. Let's look at Comerica's ticker. What is their ticker? CMA. Comerica down 8.8%. Jeez. What's the D's mean? Oh, dividend. Dividend. I didn't even know. Bank America. PacWest, down. Comerica, down. Who's this? First Republic, gone. Zion. Is Zion gone? Man, Zion down. Let's see the First Republic one. No, First Republic's gone. They shut First Republic down. So, Zion, down. What's Zion down to? $20. Mm-mm-mm. Western Alliance, down. JP Morgan, not down. Tesla, Tesla's way closer to its moving average than it has been since the pandemic. I'm still concerned about the fact that they said there's only 20 years left of lithium and people want to invest in electric cars. It doesn't make sense to me. I heard Amazon's headed down. And here they are. They want to sit at about, they were up high, guys. Amazon is like at 175 and Amazon needs to sit like at 120, which is probably what their average is, 130. I think they should sit at 120. I heard that they were trying to correct themselves. Shopify's up. Sometimes I don't know how to use this. Oh. Oh my, I didn't know you could do that. I was exactly today old when I learned to use Yahoo Finance charts. Should probably buy Shopify, man. Everybody uses Shopify. I say Shopify in the long run, unless they come out with something better with these bots. Man, America. All these banks, we'll see. Over the next week, these banks are going to, all the mid-level banks, because we don't need mid-level banks. We only need rich people banks. Okay, guys, so my tea is done. My hair is thoroughly messed up. And I have some grocery shopping to do, so we are going to call this a day. Thanks for coming. I hope you had a great time. I will be back here tomorrow to close up the week on Friday. Same time, same place. Be there or be square. Have a great day. And if you want to check out any of our other live streams, if you're interested in gaming or anything else fun like that, bop back in and we will see you there.